Hello dear students, welcome to Devika's Commerce and Management Academy. Marginal costing we are discussing in managerial accounting. We have seen the introduction of marginal costing and break-even analysis also in the previous classes. Now today we'll see break-even analysis formulas. If you understand the formulas, marginal costing is nothing. When I was student, not only student, even today also, if you ask me any of the formulas, I can say anytime. So that kind of memory, that kind of remembering the formulas, it is very much required. If you remember these formulas, marginal costing is nothing. I'll make you to understand how to memorize and what kind of formulas are there, everything in one class only. So before going to the class, let me tell you, there are many subjects which already prepared in our channel. Please check out. Lot of videos I prepared especially for all the student community point of view. Free of cost, anyone can use it, utilize it and enhance your subject skills wonderfully. Don't forget to share these videos. That's the only help you are going to do for me. Now, coming to the break-even analysis formulas, I'll tell you segment wise. It will be easy for you to remember. Okay. First of all, how to calculate break-even point, BEP, break-even point. Okay. So the calculation of break-even point is here. This is the first segment. So this is the first step. Break-even point. How do we calculate? To calculate break-even point, we have two ways. One is calculation of break-even point in units or in rupees, or you can say it as value. Okay. First, if you want to calculate break-even point in units, this is the formula. Fixed cost, FC, fixed cost, by SP, selling price minus variable cost. Selling price per unit, please remember, because we wanted to calculate break-even point in units. So, selling price per unit, variable cost per unit. Is it remember? Fixed cost by selling price minus variable cost. FC by S minus V also you can say, FC by S minus V. So that you will get per unit, units wise. Break-even point in units. How many, at what units you will get the break-even point, that you will get to know through this formula. And if you want to know break-even point at which rupees, value wise, for that this is the formula. So this is for units and this is the value wise. Value wise we have two formulas. First formula is that BEP is equal to fixed cost by S minus V into S. S is selling price, variable cost, V means again into multiplied with selling price only. Okay. Fixed cost by S minus V into S. Fixed cost, say along with me, it will be easy for you to remember. Fixed cost by S minus V into S. So you will get in value. The same thing you can say it as a fixed cost by contribution into 100. What is contribution? Contribution means nothing but S minus V only. Please remember, very much useful. Okay, contribution means S minus V, sales minus variable cost. So if you want to calculate in rupees, one formula is FC by S minus V into S. The same thing you can say it as a fixed cost by contribution into 100. What is contribution? S minus V only. This is one formula. Second formula is break-even point in rupees. Fixed cost by PV ratio. Wherever you see fixed cost is common. Everywhere fixed cost is common. Okay. Fixed cost by PV ratio. Most of the time people use this one only. Most popularly we use this formula, fixed cost by PV ratio. What is PV ratio? How do you get the PV ratio? PV ratio formula is this, S minus V by S into 100. S minus V by S into 100. Easy to remember. S minus V by S into 100. So that you will get the PV ratio. General formula is fixed cost by PV ratio. PV ratio, how do you get? S minus V by S into 100. Okay. So this is about calculation of break-even point. Second, we'll go for marginal costing equation. Very much important. Marginal costing equation, S minus V is equal to F plus P. This formula you remember first. If you remember this formula, everything is in your hands. Okay. What is that? S minus V is equal to F plus P. The same thing you can say it as a contribution is equal to F plus P. What is contribution? S minus V is contribution only, right? So we are saying S minus V by F plus P or contribution is equal to F plus P. We have learned here also contribution, S minus V rather than S minus V, we said contribution here also. Rather than S minus V, we can say contribution is equal to F plus P. Able to remember? The same formula, we are twisting it, we are changing it. Suppose say, if you take out F outside, then F plus F, if you take it outside, okay, S minus V, this is V. If we take it out, the formula will be different. I have written something. If we take it out, S minus V minus P. Okay, we are taking fixed cost outside, then S minus will be as it is, profit will be minus. So this is second way. In the same way, if we take it profit outside, we take profit outside, S minus V minus F. Anything, whatever you want, you can change it, you can mold the formula as per your required, but the base formula is S minus V is equal to F plus P. This you have to remember. This is about marginal costing equation. Next, PV ratio. PV ratio also, as I told you, S minus V by S into 100, this is the basic equation. General usage equation is this one. Apart from that, we have some more formulas also. First one is that PV ratio is equal to S minus V by S into 100, the same one. S minus V is by S into 100, okay. So this is general formula. The same one we can say it as a contribution by sales into 100. What is contribution? You know, S minus V is contribution. We have seen here, we have seen even here also, contribution means nothing but S minus V, okay. So the same formula we are saying it as a contribution by S into 100. Contribution is S minus V. This is first formula. There is another formula, that is PV ratio is equal to fixed cost plus profit by sales. Fixed cost plus profit by sales. Fixed cost is common, plus profit by sales. Second formula, rarely we use it. And there is another formula. Sometimes we need this formula. Please remember this. These two are very much important. Very rarely we use the second one. Third one is that change in profit oblique change in contribution by change in sales. You have to take either change in profit or change in contribution. They'll give you in the problem like 2 years profits. 2 years profits are given, then change in profit means difference of the profit that you take. Or otherwise sometimes they'll give you contribution. When they give you contribution of 2 years, change in contribution. How do you get the change in contribution? Difference of first year and second year. Okay, change in profit oblique change in contribution by change in sales. Change in sales is common. Either you have to take change in profit or change in contribution. Any one you are going to take here by change in sales. This is about PV ratio. Next one, fourth one is margin of safety. How do you get margin of safety? Simple formula, the most usage formula is here. Margin of MS means margin of safety. Actual sales minus BEP sales, break-even sales. Actual sales minus break-even sales. Mostly this formula will be using to calculate the margin of safety. How much margin is there for safety point of view? Actual sales. Actually, I sold 6 lakh rupees, say for example. 6 lakh I sold. As per the break-even sales means when you use this formula, either first one or second one, if you use it, you will get break-even sales. Say as per break-even sales, as per that formula, say this is 5 lakh. The difference is margin of safety. Actually, I got 6 lakh of sales, but as per BEP means no profit, no loss. At that stage, 5 lakh only the break-even sales. Break-even sales are less, but I got 6 lakh. The difference is 1 lakh. 1 lakh is the margin of safety. So that 1 lakh represents how is your organization, how you are running the organization. Is it going towards the profit or loss? It's, of course, it's towards the profit only. So that is the formula. Mostly we use this formula only. Margin of safety is equal to actual sales minus break-even sales. And there is second formula. This is also we can use. Margin of safety is equal to profit by PV ratio. Profit by PV ratio. If you get 2 years profit, recent profit only we are going to take. Are you getting it? 2 years profits are given, say 2020-21. We take 21 profit only here. No confusion. Okay. So margin of safety, second formula, profit by PV ratio. And there is a third formula also. So third formula, that is margin of safety ratio. Margin of safety formulas are only these two. This is, you can say it as a second stage. First one is margin of safety, two formulas. Third one and the second one is that margin of safety ratio. This ratio we wanted to know. To know the ratio, we are taking margin of safety, means you got already from this formulas margin of safety. That margin of safety by sales into 100. Easy to remember. Margin of safety ratio is margin of safety. Already you got margin of safety. That divided by sales into 100. That's all. So this is about the margin of safety. There is another formula you have to remember to know the sales or to know the profit. How much sales are required, how much profit is required. To calculate that, we can use this formula. Please remember this. Sales is equal to fixed cost plus profit by PV ratio. Sales is equal to fixed cost plus profit by PV ratio. Here sometimes sales are missing. To calculate the sales, we can use this formula. Sometimes profit is missing, sales are given. Only one item is missing, means we can calculate it. If you know the rest of the items like sales, fixed cost, PV ratio, you know profit you want to find out. That you can find out by using this formula. This is also very much important. Am I clear? First take a screenshot, pause the video and note down. Now what you have to do is here, please note down and understand these formulas. Once if you understand, practical problems are dead easy. You can work out very easily. So next class onwards, we'll work out practical problems, but you must be thorough in these formulas. Then only we can go ahead. Now see you in the next class. Till that period, practice well. Don't forget to share these videos. Have a bright career. Good luck.